Well, it's a world away from the troubled economies of America and Europe, but Channel 9 is facing some of its own debt problems. James Packer sold Channel 9 5 years ago to a private equity firm for a whopping $5.6 billion. Since then, the buyers and Nine management have been trying to convince creditors to extend a looming deadline for repayment, and the decision's expected in the middle of this month. Greg Hoy takes a look at what lies ahead for Channel 9 and whether its golden era can ever be repeated.
Who wants to be the billionaire that stands to lose billions?
Hello everybody, welcome to the Millionaire Hot Seat tonight.
That's the perilous prospect the Nine entertainment company's private equity owners now face, less than 5 years after investing around $5.6 billion to buy Nine and its various media assets, including magazines. CVC Asia Pacific and Nine management are now pleading with around 80 banks and other lenders, including hedge funds, to decide by mid-December whether a delay of heavy debt repayments will be allowed or not.
They can't sell the business and they can't pay back the debt and generate substantial profits if administration is on the cards, as some pundits have called it. Then pretty much all the equity is lost.
It's a serious situation, I think, for several reasons. The first is that the debt is due to be refinanced the 7th of Feb next year, as I understand it. And following that, it's serious for the second reason, that the advertising markets and certainly the underlying earnings of the assets that within Nine Entertainment are under some pressure.
CVC Asia Pacific is a subsidiary of global private equity giant CVC Partners, masters of the universe who manage global investment capital and boast their brilliance in doing so.
I think CVC has been one of the clear winners of this financial crisis as a consequence of our conservative investment approach and also...
But in Australia, just as the internet began to erode the revenues of networks like Nine and particularly its magazine division, along came CVC with a bucket of money to make James Packer an offer he couldn't refuse. CVC paid $1.8 billion for its own equity, then loaded Nine with $3.6 billion more debt to sweeten the deal. The plan was to revamp and resell Nine in a profitable float. But rather than float, the network has been sinking under its staggering debt burden ever since.
CVC paid, $5+ billion. Is it worth $5+ billion?
Since the time of those transactions, it seems that these multiples will be very difficult to achieve again, given the structural risks facing the industry. And those structural risks are basically the impact of the internet either on the publishing businesses within media or on the television businesses within media.
It's a very simple recipe. The higher the price you pay, the lower your return.
What CVC seems to have ignored is history. 20 years earlier, Alan Bond paid Kerry Packer $1 billion for Nine before going under, bequeathing Nine to its banks and allowing a delighted Kerry Packer to buy his business back for a fraction of the selling price. You only get one Alan Bond in your lifetime, quipped Packer Sr. But now history is repeating.
CVC is James Packer's Alan Bond.
The Packer family had their second Alan Bond turn up and gave them a good price.
G'day Adrian, how are you? You're the new Packer, so we've got you a Packer kit.
CVC's equity in Nine is now widely considered worthless. The head of CVC Asia Pacific, Adrian McKenzie, ignored all interview requests and has been noticeably absent from the media, save for this impromptu visit from the ABC's Chaser team.
Interesting taste.
Suggesting it saddens him to say so, rival media mogul Kerry Stokes recently predicted with no equity left, Nine will soon be owned by its banks. Kerry Stokes hugely profited himself by selling half the Seven network to private equity soon after James Packer, though he did dilute Seven's private equity debt by engineering a merger with the almost debt-free West Australian newspapers. Regardless, Seven West shares have since fallen almost 50% under its own debt burden. Other media stocks have also declined in that time, including the Ten network, in which James Packer has since invested some of his spoils from the sale of Nine.
Seven West stock has underperformed. You're looking at 10, and that's quite in a bit of trouble there, I suppose, from a performance point of view. You look at all the other media stocks, Fairfax, etc. They're not performing very well.
But the problem is most pressing for the Nine network, and the clock is now ticking as to when it must be resolved. Unavailable for interview, Nine's management have said this is a problem for its owner, not the network, though both have been busy pleading with lenders to decide by December 16th if they will allow a postponement of debt repayments. Of course, Nine's owner might always cough up more money to keep the network afloat, but Kerry Stokes is not alone in thinking that that's unlikely, and that Nine will soon end up in the hands of its banks or those hedge funds that have been busy buying Nine debt from those banks bailing out at a discounted rate.
We may find that the ownership of Channel 9 changes. We may find a substantial losses incurred by both the banks, the lenders, and the equity participants. There's no doubt about that.
The banks will probably be very jumpy. If there is a point where it does look like the business is not capable of refinancing its debt, then certainly the banks will be looking at appointing an administrator.
I think the most likely outcome is definitely a consortium of banks own Nine Entertainment.
That is, for a while at least, history suggests, before they would attempt to on-sell Nine either to foreign interests, back to its original owner, considered highly unlikely, or back into a public float, which wouldn't be easy either.
Always be wary when you're buying from private equity or a substantial owner. Ask yourself the question, is this absolutely the best time to be buying this particular business?
It'll be very difficult, I think, to sell these assets back to market at a multiple that retires all the debt. So, unfortunately for the consortium of banks, they'll end up owning these assets.
Happy Christmas.
That report from Greg Hoy.